Hello and welcome to this Professional Broking and Audience With. My name is Andrew Tjaardstra, Editor of Professional Broking, and today I'm joined in the studio by David Smith, Zurich's Head of Brokers for the UK and Western Europe, who is here to talk about the importance of rate hardening as we attempt to climb out of the UK's worst recession for over 60 years. David speaks ahead of a booklet entitled Rate Increases Explained, set to be released with PB in the autumn, which sets out in more detail Zurich's rating philosophy and offers advice for brokers when talking to customers about this difficult issue. Welcome to the studio, David.
Thanks, Andrew. It's very nice to be here.
My first question is about the economy and its impact on insurers' balance sheets. How is it impacting insurers in this difficult year?
Well, really, it's a double whammy, really, Andrew, because we've got the impact of the recession on top of the financial turmoil in the financial markets, which then add to the general claims inflation that we see, as well as the impact of regulation on rating. So if you take the recession, then it obviously has an impact on fraud. Fraud in 2008 was up 17%. Arson was up 16% to £1.3 billion spend. So the impact of the recession will hit us even harder. And then if you add to that the turmoil in financial markets with falling investment returns, obviously a lot of our income is earned from investment return. So quite simply, on an employer's liability policy, then we're losing around 5 to 7% of return that we would have been getting on that type of long tail account 2 or 3 years ago. So those two pressures on pricing are added to the general claims inflation cost that we need to keep funding, things like credit hire, which cost us around 5 to 7% a year, increases in bodily injury, continued increase in care costs of around 10% per annum, National Health Service treatment costs of 8.3. So you start to add these up, and then you put retrospective legislation on top of that, or regulation, and you start to get to some quite big figures quite quickly. And what we're trying to do is to provide controlled and sustainable rate increases, rather than the rate hikes of 20 to 30% that we've seen in some cycles of the past.
So are you saying that now is the best time to put up rates despite what's happening to businesses? You realise that businesses are struggling to pay many of their bills as they are, and that insurance prices going up is not necessarily going to help them at this time?
No, it's unpalatable, and we recognise that. But better to have rate increases of around 4, 5, 6, 7% now that can be budgeted for, rather than wait 2 or 3 years and have rate increases of 30 or 40%. So there comes a point when rate increases have to be applied, bearing in mind businesses and individuals have seen fairly flat or reducing rates for 2 or 3 years, or possibly longer than that, 3 or 4 years. There comes a point when rate increases have to be applied. And we're at that point now, and some people have to take the lead, and in Zurich we'll take that lead in the market.
So would you say this is the insurance cycle? This is part of the insurance cycle, people talking about soft market followed by hard market, or is this different?
It's slightly different. There is a cycle impact because rates have been reducing for 2 or 3 years. But this is slightly different because the impact of the recession on fraud, arson, etc., and maintenance of equipment, added to the falling investment returns, bring an additional pressure. But bear in mind that the rate increases that we're indicating in the market generally for commercial lines are probably between 5 and 8%. And we've seen significantly higher increases than that in the past. So what we're trying to do is do it in a controlled fashion so that an FD or an owner can budget for the business, as opposed to large rate increases which really do have a major impact on an insured's financial position.
And how hard are you finding it putting up rates given some of the competition out there?
Yeah, there's always outliers. I think generally most of the insurers in the market realise now that rates need to rise You'll have seen the half-year results for insurers, which in most cases show profits falling and combined ratios rising. So most of the major competitors are taking some action to put rates up. Having said that, there's always those that are looking for growth, fairly new entrants to the market, for example, or people trying to enter the market, but that will always be there. So it's always a challenge, but someone has to take the lead, and in Zurich that we feel that's our responsibility, certainly in commercial lines and across personal lines as well.
And some brokers are complaining about the differentials between new business and renewal business in terms of pricing. Are you seeing any of that at all?
I think it's a reality. There will always be some difference between new business pricing and renewal pricing. And I think whatever industry you're in, you see that type of effect. Where it becomes disproportionate, then it becomes an issue. And I think it's quite easy to convince yourself, if you're a fairly new entrant into the market, that your new business pricing is only there for a period. But when it forms a large proportion of your book, then it becomes a significant issue because your whole book becomes underpriced. So I think it's a tactic in the market that brokers may not like, but is a reality. But it shouldn't become disproportionate.
Okay. And brokers are clearly also having hard times, like many other businesses. Obviously you're talking to lots of brokers all the time. Are you seeing any positives for them at the moment in this market?
Well, it's obviously the broker who's got to stand in front of the customer and tell him that his rates need to rise when he's under severe pressure himself. Yeah. So that's a difficult task and a difficult skill. However, the strong survive. Those with the right skills, those who have the ability to communicate the needs of an insurer through to the end customer are the ones that will survive and the ones that will flourish in this environment. I think it's a very positive message for a broker to be able to communicate to a customer stable pricing for the future. The last thing a broker wants to do is go into a customer, provide him with a cheap price this year, and then go back next year and tell him 30% rate increase. That's a natural break point for that customer. If I was a broker, I'd be using my skills now to talk about sustainable price increases year on year that the FD of my customers can budget for.
And you're presumably trying to help the brokers when communicating this to the customers?
Yeah, the whole essence of trying to put out the booklet that we are, Rate Increases Explained, is to give the broker the data and the ammunition, everything that we've got to be able to explain the reality of why rates are rising through to customers. It can only be done by honesty, and I think a customer will accept the business principles if he understands them. I'm sure some of the figures that I talked about previously that the end customer doesn't understand and doesn't know. So our job is to give the broker the information and the ammunition to be able to go to a customer and explain that honestly and openly. So we'll be doing press articles, we'll be doing the Rate Increases Explained, booklet type promotion, further information as brokers need it, and we're also very happy to stand there next to the broker with the customer and talk it through ourselves. We won't hide behind the broker, we'll stand there with the broker when he needs us.
Okay. And we've just seen some of the half-year results from some of your competitors. How is Zurich standing up in this year, this very difficult year, and kind of going forward for the rest of it? How's your outlook? Are any positive signs or?
Well, I know, Andrew, you'll have looked at your results yourself, and you know that the Zurich results are an excellent set of results. Globally, a 26th consecutive quarter of profit, the third quarter of rising profit. And in the UK, our results mirror that. We've had an excellent result to half year. Now, as we look forward, there's some downsides. Obviously, because of the recession, the exposure, the number of people employed and the vehicles on the road is decreasing, and that's hitting us by about 7% on commercial lines premiums. So we have to. That's an immediate impact before we've even start to write new business. And on the personal line side, the personal motor market, that the figures again from the end of last year showed the market writing at completely unsustainable combined operating ratios. And that's a frustration to us as we price sensibly for the future. So those are the downsides. The positives, our multi-segment approach across commercial and personal lines pays dividends for us, really. We have financial strength, sustainable pricing, and then what a broker and customer really wants, which is expertise in his business. So we're seeing growth in a lot of those segments. We're still seeing growth in property investors. We're seeing growth in professional financial lines, in SME. And despite the recession, we're growing our customer numbers and our premiums. So I've got to be pleased, really.
Okay, and also we've kind of seen some consolidation kind of stopping a little bit. Do you kind of welcome that, or does it not make too much difference, the consolidation of brokers?
I think it stopped slightly, obviously, because of the availability of capital. I don't think it stopped indefinitely. I think consolidation will continue. But the doomsday scenario that people talk about of there only being 100 brokers left in the UK in however many years won't happen. There will always be a cadre and a spread of independent brokers, consolidators, global brokers. So I think consolidation will continue, whether it's into networks or whether it's by acquisition. We're just in a period of pause at the moment. And to me, it's neither a good thing or a bad thing, really. There's plenty of choice out there for the customer amongst brokers, and we're equally happy dealing with the consolidators as they are with the regional independent broker.
And you yourself, you're now dividing up your time between the UK and Western Europe. How much time are you spending in the UK and how much abroad?
Well, I'm a simple person, so it's simple for me. The UK premiums are around, for the broker business, are around 50% of the broker business across Europe. So I spend half my time in the UK and half my time across the rest of Western Europe. The job in the UK is really a consolidation and continued growth, whereas there's a huge white space for us across Western Europe, where Zurich is seen as a tied agent motor market and the global corporate market, but not in the SME and middle market. So we're bringing our UK skills to bear across the rest of Western Europe with myself and my team for the benefit of the wider Zurich group, and we're making some early success, so thank you, it's very good.
Thank you very much for joining us in the studio, David. That's all we have time for, and we hope to see you next time.